Guys and gals, I want to go over the a rejected video real quick, only about a couple minute video on the big short we had on crude this morning, happened on gold and crude. So let's go over gold first. And I want to go over a rejected area first, and then we'll go over this ATR chart, how it combines with J signal over here. If we look, this is where profile was this morning. We have profile here right around 1174.5. and it got rejected off of it. We were in a downtrend in gold this morning. And this is called trading a rejected area. Once an area gets rejected, that's a low value area. This is also the low value area on the black charts as well as your own Ninja charts. So the low value areas coincided. So what I said in the trading room, I'm looking for a number 3 off this level right here. So I put the number 3 right there off that level this morning as my projected breakdown retest. And that's exactly what happened. The market came down, it bounced off of it, and then it finally broke, and then it retested for my number 3, and then she had the big hit. And this has happened on crude oil this morning also. It happens on a daily, weekly, monthly basis. Same setup's been going on for 30 years. It rejects off profile, first of all, against overall trend. So the market tried to counter trend trade itself right here. It tried to counter trend trade itself to the upside. And I said, I'm looking for a number 3 break retest. Once it rejects off profile, so the market was in a downtrend, right? So we're not buying LVA. We look for LVA to bounce. And then, since it's in a downtrend, we don't buy LVA. We don't counter trend trade. We're looking for it to break below LVA. I said before it broke, I'm looking for a number 3 trade, a retest of LVA. And then you look for a pull-in bar. Now, the best trade you're going to get is it won't close on the retest right here. It won't close inside of even LVA. If it stops right on LVA and then gives you a pull-in bar, that's the weakest part of the market. That's a definite green light to really get short the market. So that market was really weak. But the key is I want to show you is the rejected area. Look how the rejected area right here is exactly where the number 3 played off of. And that's what you got to remember. When you reject off market profile, that's your best area that you can play off of for the 3. So if I come down, I'm in a downtrend, I reject off LVA. I know if LVA ever breaks again, I know that number 3 is very, very, very special to me, and it's looking for a big hit. Now, let's look at this ATR chart over here. How do we use that with overall J signal? This J signal, we already know J signal, the best time to trade it off the 3-sim Renko right here. We already know the best time to trade it is when you first close below LVA right here. So here's our first close below low value area. So we already know LVA is right here. And the first J signal retracement short's the best one to take. What happens is, though, what happens if you get an ATR that conflues with the first J signal after number 3? It's some of the most powerful trades you're going to get, and it happens on a weekly basis. I have 2 dots over here on my ATR chart, average true range chart. Anybody that knows anything about the market knows the market cannot go straight down and can't go straight up. It gets out of balance and it gets back into balance all day long. These dots tell you when it gets back into balance for continuations. So what I look for, these outer edge dots are a full retracement. It happened on crude this morning twice. I'll show you in a second. And these inner dots are shallow retracements to look for J signals. So what happens if the market gets out of balance and gets way away from both these dots, it's going to do one of 2 things. It's going to have a shallow retracement for continuation, or it likes to come back up these outer dots for a deeper retracement. So what I'll do is if I get a J signal that happens either on a shallow or a deep retracement dot, I know this J signal is a powerful J signal. It's probably going to be your best one of the day. It happened exactly on crude oil the same way this morning on the big hit on crude. So what happened was we broke down and we retested on my black charts here for a breakdown retest off my black charts, off my profile for a pull-in. But then you got a second shot at it because the first J signal happened with my ATR dot. And that's how it combines. The rejected areas are the best time to get short or long off of a retest of market profile, then finally breaking it and retesting it for a pull-in, or the first J signal that matches up with the ATR. Typically, the ATR trade, the average true range trade on these 2 dots, will happen after the number 3 when you're below all LVA or above HVA. That's the best time to go. If you look what happened, the market just tanked. Look at that big move in the market. Almost over $1,000 trade just like that on J-Signal and the number 3 rejected trade. $1,000 trade per one contract, maximum $150 loss. So that was almost a 10-to-1 reward to risk ratio right there just on that trade using the ATR. Now, if I look at the ATR on crude this morning, it was no different. If I look at the ATR on crude, one of my best J-Signal trades this morning was right here. Right here, my J-Signal trade came up at around 8:45. This is my top J-Signal trade. Nailed this big hit down. Another ATR trade came here. Another ATR trade came here. Another J-Signal ATR came here on the corrective wave on the way up. If you notice, they were all on my average true range dots. That's when your big J-Signals happen. The big move here, giant move here, giant move back up here, 45.30 all the way up, just over a $500, almost $600 trade per one contract. My ATR coincided with J-Signal.